when you're buying a house as a loan officer, we calculate your income depending on how often you get paid. So we can review that today, right? So your paycheck may be weekly, bi-weekly, monthly, annually, and we're gonna break that down for you. So let's go over the first one. Let's say you get paid hourly. Jessica works in Queens and earns $30 an hour and works 40 hours a week. So we multiply $30 by 40 hours, times that by 52 because there's 52 weeks in a year. So she's making around $62,000 annually, and we divide that by 12 because there's 12 months in a year. So she's making $5,200 per month, and that's her gross income, and that's what we will use for the mortgage. And now let's say the second scenario is weekly. Kevin earns $1,300 gross every week, right? So we take that $1,300 times 52, so that's $67,000, and divide that by 12. And this person, Kevin, makes $5,600 every month, right? And then there are two scenarios where it's bi-weekly and twice a month. And trust me, there is a difference. So bi-weekly, you get 26 checks per year. So we take, let's say Maria receives $2,600 gross every 2 weeks. So we take that $2,600 times it by 26, that's $67,000, and you divide that by 12, and that is $56.33 per month. And now David gets paid twice a month, right? So he gets paid on the 15th and the last day of each month, right? So we take $2,800 times it by 2 because they're getting it twice a month, and that's $5,600 there, okay? And then Alicia here and receives a gross salary payment every month. So there's no weekly. Every single month she gets one check, and that's $5,600, and that's what we're gonna use, okay? And there's some people who gets paid salary and they get paid annually, and we basically see what your salary is. Let's say Anthony earns $72,000 every year, and we divide that by 12. So that is $6,000 every month, right, for Anthony. There are so many clients of ours that are self-employed, right? Sometimes you have a wife that's working as W-2 and the husband is self-employed, right? So on your tax returns, we look at your Schedule C, and we're looking at your net profit, not your gross, right? We don't care about your sales. What we look at is your number line 31, your net profit. Typically, we would take that and divide it by 12, but there are a few things that we can add. There's a line 13 we can add. There's few lines from travel and meals 24. We remove that. Whatever net amount that comes, we divide it by 12. In this case, it's $6,500 per month. So when you're buying a house, you can have two different people, W-2 and your self-employed people on the same file, but just the calculation is going to be different, okay? So if it's W-2, we look at your gross, and if it's your self-employed, we look at your net. If you have any questions, please call us 516-218-1297.